All right, good morning, good morning, good morning. Bum, bum. Alright, chat, what up? How we feeling, man? How we feeling? Let's see. Wally, good morning, bro. Eric, good to see you, my guy. I stopped trading for probably just under a year now. Is there a huge difference from futures to trading FX? Let me turn this music down a little bit so I can answer you. And then you guys just let me know if that's at a good volume. We got a little bit dark techno on today. Well, good question, Eric. If you're making the switch from FX to futures or either or, there really is not much of a difference. I'll be honest with you, it's just a lot of the same type of stuff in terms of price action and chart. There are a couple of things you'll have to kind of get used to, just like, instead of going to like the XAU USD chart for gold, you would go to the futures chart, which is, GC. So that's a little bit different. The contract sizing, as somebody mentioned in chat, is also a little bit different. The thing is, though, it's super easy to learn, bro. And if you actually go to... let me see if I can bring this up for you. Second, let me just bring this up for you to be precise. There you go. So right on Top Step's website, bro, they have, it's under our program. If you come in here, they have two things. They have Futures Trading 101, which will kind of just bring you through the basics. You probably don't need to do this. But if you come in and you go to the Forex to Futures tab here, this will give you the breakdown, right? Terminology, right? Pips for ticks, pairs for products. I call them assets, whatever. Lots to contracts, buy and sell to bid and ask. Again, this is not difficult stuff. And then again, just some stuff about, the assets to US 30 into YM, US, S&P to ES, NASDAQ to NQ. Super simple stuff. But if you come on here, this will break down everything and kind of give you a little bit of some insight there, bro. So I would definitely advise that you do that, brother. And if you need a link to that, let me know. I'll drop it in the Discord or something. Alright, anyway, let's take a quick look at markets here before the open. Alright, still looking for this on the DXY. I don't think we're going to get too much action today. We do have CPI tomorrow, which is also kind of why we're live on YouTube rather than the community. And also because I had some stuff to do this morning, so I could not be live like I normally am, which was like about an hour ago. So, taking a look at the dollar, man, I mean, again, I don't expect this to do too much today. We are looking to see if we can grab some of this liquidity up at the 105 level, but I think at this point that's probably going to require a higher CPI reading, which is not forecasted. But again, we'll kind of see what comes with that. If we do make a move down into some of this liquidity, I mean, for people that prefer to buy the dollar, you could get some action down there. Again, like where we're rallying from is a pretty nice little liquidity grab. Really not too much crazy volume coming off of that, but nonetheless. But I don't think we're going to be touching many dollar pairs today. Let's just go take a quick look at gold. This was an overnight trade that I broke even on. Doesn't surprise me in the slightest, because who's shorting gold? Alright, there is some interesting action here. You could maybe say we've taken out this high. We've got an engulfing candle here on higher volume, which technically is a live OB. Again, though, I'm not a big fan of shorting gold. If you really wanted to be a little bit on the riskier side here, you could. Again, for those of you that are willing to entertain it, if you can get I would probably need another live OB to form up here, but you could try something like this. I think you're gonna take a quick L on that, but the possibility is there. Outside of that, I don't think gold is really in a position to be trading. So if you're buy side on this, I think your opportunity was last night. NQ. You know what's funny, man, is NQ did everything we wanted it to do yesterday. I'll just be honest and like upfront about it. I really just didn't have the balls to pull the trigger. I wasn't confident in the shorts from up here because I'm not really interested in looking to short indices. But even the whole speech through Powell, man, came down, grabbed this liquidity like we wanted it to. Again, we're obviously not leaving anything up here for Thursday, unless we build some up today, potentially. But again, though, man, these are just slow grinds to the upside. There's no reason, in my opinion, to try to sell any of this. I would be willing to try and buy this if we can get like a retest under this 2067 level again. Or 670 level, I should say. But again, that's a big ask for today, heading into CPI when expectations are that CPI is going to come out lower. So this likely just keeps printing to the buy side, which is the only direction you should be trading the NASDAQ. The Dow is just a lot of a bigger pain in the ass. That's the best way to put it. Yeah, I'm gonna continue to not touch the Dow. Yes, ES is trading at some fresh highs here. Again, see, we can already see the volatility, man. I don't think we're gonna get a very, very volatile day for CPI. Again, this doesn't really tell me much. I can only hope for a dip and play some absorption on that. I think oil is, unfortunately, I say that because this has not really been doing too much to the buy side. This might be the only thing we can play again today, if it's... The thing about this that I don't like now, because I know we were just talking about this in the Discord, but like we just now spiked down and like built up more liquidity here. So I think the safest thing to do is probably wait until after inventories. Maybe we get something below this choppiness and below these lows. Again, maybe something forms down here. But if this is just some absorption that happened on like lower time frames, it's possible we don't come back. But again, I'm still not in this. Let me see what you guys are talking about in Discord in the premium real quick. Let me see. Some people got taken out at break even. I think Matt went break even after the spike. Yeah, Wally says build up our liquidities. Look, I agree, man. Like, I'm sorry for the people that are already in this in the Discord, but I do want this to come down one more time. My apologies for that. I think Wally is got this safer setup. I won't say that we'll get what we're looking for, because maybe we don't. I think it's tough for me to trade away from this, because even the absorption is like not that great. Like, you have to kind of force this on the 1 minute to find any sort of absorption, just because of the way this kind of closed. So I'm gonna keep rooting for us to get a retest to 81. If we can get that off of inventories, I'll be interested to maybe go long on this. Again, you can maybe take out these highs. If we take out these highs before that, then so be it. I'll just not trade today. But I think this is like one of the only setups I'm looking at outside of indices to see what they do at the open. Again, if the indices push down at the open into Powell's speech, we might be able to get a buy. But again, yesterday, you know, these really didn't do too much as he was speaking. Again, not that Powell was saying anything really of noteworthy yesterday. It was all the same story. Alright, that being said, let me see what's going on in the chat here. Agree, if it pushes prior to inventories. I think I would rather see it grab that liquidity on inventories. Unless you're talking about the push up. Yeah, okay. So if you're talking about the push up, then yeah, I'm probably not gonna touch it. Inventories could give us an absorption play. On oil still, again, maybe we do move away before inventories and then you get another push for absorption, but I don't think I can trust any sort of absorption play with this liquidity left behind. So, whoops, I did not mean to open that. But I'm gonna still be looking for something like this. On oil, and then everything else we'll have to see how they react at the open here. News manipulation, yeah, I feel you. Definitely feel you. I'm not really looking to push the button today, though, if I'm being honest, because, again, we have Powell, who's going to be just testifying, and then we also have, again, CPI tomorrow. I'm expecting the market to stay mostly range-bound. Again, there might be some opportunity here with indices trading at near fresh highs. Maybe some of the SMT people are like, oh, ES made a new high, NASDAQ didn't. If that's in your repertoire of stuff, I didn't mean to like sound like I was mocking those people. I maybe kinda was, but if that is how you trade, again, maybe you have some confirmation there. It's not something that I use as a confirmation though, because you could just look at the Dow, which is always doing some bullshit and not trending. So because one indice isn't doing something doesn't necessarily mean anything. At least to me. Yeah, man, let's bring this stuff up. We're gonna watch a lot of these side by side here. Probably pull up NQ. Actually, no, let's pull up that gold. We'll wait till indices open, because this gold might be in a good position to short. And I would prefer not to. But I would be lying if I said there was no setup on the technical side of things. They were getting on Powell's ass yesterday. Yeah, there's a few people that were, bro. Shout out to that Warren dude. I think his line of question, from what I heard, I missed a little, beginning portion of it. Well, Warren was very much on like the same path that I'm on with the macros, and that's that the Fed is greatly ignoring the labor market. Again, he asked very direct questions. Is the labor market weakening? And again, Powell's stuck, man. He can't say that it's not. All he can say is that it's. I mean, at this point, I don't really think they can even continue with the whole. It's relatively strong. Blah blah blah. Because again, bro, they're comparing it to like COVID times, which is just stupid. Especially in the media, they'll be like, oh, we have the lowest unemployment in like 3-4 years. I'm like, yeah, it's because 3-4 years ago we were at 14% unemployment. Like that, it's not a fair comparison. So I think that dude Warren was really drilling into Powell yesterday. I really enjoyed that segment. Again, I keep speaking to you guys about it. The labor market is weak. It's only gonna get weaker. It's only gonna get worse, and it is gonna put the Fed in a position where they do have to cut rates. Like I keep saying, bro, in September, October, that's when I think they'll cut rates the first time. There are some people that think that will kickstart off cuts going forward. I still kind of think they'll cut, pause, and then maybe cut again. But again, we'll have to hear it from Powell's mouth when they do decide to announce that first cut, whenever that may be. Again, rooting for what's essentially the September meeting here. Gold fell once Powell opened his mouth yesterday. Yeah, I mean, again, I don't really think he said anything specific to cause that. I don't even think he didn't even really start speaking right at 10 either, right? It was a little bit after. So yeah, maybe 10:45 here. I just think that's a reaction. I don't really think that's I don't know. Again, if it does that today again, I wouldn't be opposed to taking continuations if we can swipe something. I just need some sort of fresh liquidity to play inside of. Like, I don't think we get it, but I will sit here and hope for it. All I can do when the markets are not at my POIs. Yeah, those are my quick thoughts before the open. We'll see what we get here, and we'll execute accordingly. Oh, you want to sell? Oh, okay. Think your dollar reaches your news liquidity area. It tanks tomorrow. Yeah, maybe. The thing with that is, though, I think we're so far. We would have to have a pretty like Powell would really have to do a good job of speaking some strength into this today to hit. I hate how the chart don't carry over, but to push up here, like that's a pretty strong day. Again, I almost feel like we push for this tomorrow off CPI, off like a disappointing result. Again, if standard CPI comes in at 3.2, which is above the 3.1 expectation, and core comes out at 3.4, I can see a situation where the dollar gains some strength. Even though, for me, that's not really like a bullish signal, it's just a disappointment rally is what we'll call it. So, again, I welcome it, but I just don't see how we get up here without CPI. I didn't look to that. The gold position last night, no, did not work out, but I also broke even on it. So, it also didn't matter. Where were we trading last night? Yeah, last night we just took the fail, the higher volume here. Again, it just was never able to get lower. I went break even when we made this second push down here, so it eventually came and just broke us even. Again, it is what it is. I'm not surprised that my counter trend trades like that don't work. There's no real reason to expect that to work. We're just taking those 4 science based off our execution. I'd be the same thing if you went short gold here off this 15-minute. It's like, yeah, there is our technical setup, but if you just use a little bit of discretion or wait for a little bit more of a confirmed entry, you can, you know, get those losses out of your journal pretty easily. Gold, I'm more willing to short gold than I am indices, though. And that's if you're aware of like the China macro fundamentals around gold, then you would understand why. But that's the only reason why I'd be more willing to short gold than I would Nasdaq is like, I'm really having an off day if I'm short in the Nasdaq. Alright, let's see what happens here at the open. I'm gonna bring up NQ. Also gonna go queue up Powell live stream for 10 because I am gonna sit here and watch that. Not gonna talk throughout it, I don't think. Unless he says something worth noting. We still got some time for that. Can you change stop and profit in futures with an active trade? I use Trade Locker but can't figure it out. Well, who are you trading with that uses Trade Lockers with futures? You should be able to adjust your stop and take profit. There should be no reason why you can't edit your trade after you enter it. I remember with Forex, it was as easy as moving the brackets. That is how easy it should be. No matter where you are, if you're on TradingView, if you're on Top Step X, Oh, you're on Trade of It. Oh, okay. Well, Devin, here, brother. Here. So the easiest thing to do, bro, is open up Trading View, click on the trading panel, because I don't know how to use Trade of It, so I can't help you there. But if you hit the trading panel here, you can log into your Trade of It account on Trading View, and you could just trade on Trading View instead. So just come in here and log in with your Trade of It credentials, and then you'll be on here. In which case, then you can just move the brackets. But how to do it on the actual Trade of It application, I don't know, because I just log in on TradingView. So, but if anybody else in chat knows, please let them know. How about our boy there? Alright, markets did open here. NASDAQ running right out of the gate. It's pretty much what NASDAQ does, so I'll give her a few minutes here. Oil also coming down to this level too. We're going to keep an eye on her. Still would prefer to trade this after news though. With a little bit of a reverse there. There you go. Fall before CPI, baby. Beautiful. Alright, good. Now that she's dipping, we can see if we can get some good levels before Powell speaks, or even while Powell was speaking. I still think ideally I would prefer to trade under this old reaccumulation, but that's just me. About 5 minutes in here. I gotta say, I am pretty happy overall with oil's like daily dip that we're on. Because again, we do need this to kind of course correct throughout the end of the summer. Just for further inflation reports. What really annoys me more than anything though is that I didn't take that live OB up here on my AMP or my TradeStation account, which my TradeStation account I wouldn't have been able to hold overnights anyway on this. On AMP I probably would have had no problem. But yeah, kinda sorta really regret not holding onto this one. As it works out, it's like a 1 to 20. Dumb. I could have put nice 300 bucks on that. It's about my average risk. Alright, oil rebounding again without taking the lows, which is definitely annoying. NASDAQ still falling before Powell speaking. Let's go take a quick look at gold. Gold's still holding that 15-minute OB, man. Wally, what do you think, brother? You think... Oh no, man, we kind of invalidated the body of the candle. What level were you looking at? 23.89, 1 hour long candle. Like, you're looking for the wick, the wipe of the wick. Yeah, we wiped that at like 10 AM, and that could be... Maybe fade Powell off there. Yeah, we'll have to see how that resolves itself here soon. What did Naz do yesterday at the Open? Like right at the Open. They like played around, right? Like spiked the highs. And yeah, played around. I think we need to see, if I was gonna short the highs, I probably would need to see something again like this into Powell. Where we kinda take the highs. If I was gonna look short side. But again, I would probably rather just buy it down here. Alright fam, we're gonna just wait until a setup appears for us. Or for Powell to start speaking. Let me know if you guys want the music turned up a little bit while we wait. I'm gonna check out Twitter. See any sort of headlines we might have. Really nothing across my news feed here. Oh, actually, here's something interesting from the Kabasi letter. It says the construction industry saw 4,613 layoff announcements in June, the most since the 2008 financial crisis. This jump was even higher than the 4,200 job cut announcements in the 2020 pandemic. Layoff announcements surged by 20% year over year last month, the largest increase since September 2023. Meanwhile, 1.85 million Americans are now receiving jobless benefits, the most since 2021. The U.S. labor market is weaker than it seems. Yeah, I could have, and I did tell everybody that months ago. It's so great to see. I mean, I tell you guys this all the time when it comes to like fundamental analysis, but you always have to make predictions, and I love seeing my macro fundamental stuff come together. More so than my technicals. More so than my technicals. I don't even know why that is, but I'm telling y'all, man, I love when I say something for weeks to months that I suspect and then starts to actually show up in the market. Probably the world's greatest feeling. There's still not too much going on here. Oil might take these lows, which again we're gonna watch. See if we can maybe snag a position here. If it's worth it, it might not even be worth it. Nasdaq with a little bit of a recovery there. 20 point. There goes oil slipping below. Alright, well we got the little slip for now. Don't need the perfect entry here, just really need to see and build some confidence that it's gonna hold that. Then we can begin to maybe scale in here. Still waiting. I haven't pushed the button yet. Alright, I'm gonna scale in a little bit here as a test. Let me bring up, where's top step? Logged in. No, switch. Oh, and of course it's coming back down now. Okay, we'll give it. Yeah, we'll give this a second. Watching right on top step though. See if we well, I kind of want to add a little bit and play the 4-hour. For those of you that have been watching this, you know there's a 4-hour OB we can potentially play here. I do want to get a little skin in the game at a good price. Then we can scale it more as it moves up. I wanted to play a little tighter too. We're playing the 4-hour. Let me just make sure the 4-hour candle. If we start to get back up, I'm gonna have to take a little bit of risk on this. Just for science reasons. Whoops, let me switch this back for you guys. The thing is though, I don't know if I like the risk to reward to that low. Like a 1 to, yeah, I like that. Yeah, I'm gonna give this some time. I really want to tighten up the stop here. So I'm gonna give this some time. Instead of just stabbing it blindly. Oh, let me make sure that I'm also... Am I copy trading on this? Not to that account. Oh, okay, good. Come on, oil, give us a reaction, baby. Nothing else looks good today. Not that you look great. Again, we're not in this yet. Keep that in mind. I'm gonna put that down there. You just see what everything else is doing real quick. scared to look away. I feel like if I look away, I'm gonna miss something. Yeah, it's possible we just don't get something here, family. I'm gonna give it some time. Powell comes up in 15 minutes. I'm gonna be less interested the more Powell's, because I'm gonna just want to listen to Powell. We get too far into 10 a.m. I'm not gonna want to take a trade. Nasdaq is already gone. Didn't print anything down here for us to take, at least not on this time frame. I probably wouldn't have taken that one. Oh, you gotta print something. Free zone stab Nazbaz. Oh damn, I kinda wish I seen that when you typed it. Not a terrible idea though. Again, you know me, I'm always a big fan of buys on the Nasdaq. But I think oil has got the best POI potential today. Even though she hasn't been too great to the buy side. Come on, oil, give us something, baby. Alright, yeah, I'm taking a little bit of risk here on oil. I'm gonna run this as my stop. 80-90. This is the only thing I think I'm gonna take today. Let me just get that out of the way. Let me go send this to the Discord as well. See if this holds. Maybe it doesn't. Again, I wouldn't put a bunch of risk on this, but I'm gonna look for like 82. Might actually be the first loss we take if it doesn't work out. Everything else we've taken is broken even. So we've had a pretty flat week. We're gonna completely just engulf this now. It's alright. This is my only trade I'm taking today before CPI. I'm not gonna play with the markets before CPI if oil doesn't work out. I'll preserve capital for the day. Thank you doing pushing highs. Yeah, bro, we should just wake up every day and buy the Nasdaq. But that's what we have stocks for, like Tesla. Yo, Tesla opened actually. 263, no change, no change. It's gonna be interesting on Tesla because I'm interested to see if we now did we push above this? Oh, we did a little bit. Okay. Yeah, it would be nice to see if we can get like a weekly close above 270 on Tesla. Again, we're still looking for 310, but we've been in this since 184, so It is what it is. But we're gonna just watch CL here and see what happens. If this starts moving in our favor, I will look to scale into this. But I'm only light on it for right now, so we kind of build our case. What do you, Wally? You're running the 4-hour OB, huh? I just didn't like the risk to reward ratio with that. That's why I tightened it up some. Oh shit! I never hit. Oops. All right. Let me also put this in the journal as well, which I still have to get you guys like a link for. No shit. Alright, a new trade. So we got this will actually be CL trade number 2. We opened it today. We're gonna close it today because it's a top step account. Pair, CL, direction, long, New York session, time frame. Time frame. See, this is the thing that always gets me with time frames in my journal, because we took this on a 5-15 minute, but it's a 4-hour analysis. We're gonna double mark this. We're gonna mark this 5 minute and 4 hour. Oh, I can't mark it as 2? Oh, that's lame. Alright, we'll mark it as a 5 minute, that's what I took it on. We took, I can't mark it as that. Okay, we have to mark it as a 4-hour live OB, because that's what, we don't have any other confirmations. This is actually a low confirmation trade. This is actually not good. Okay. It's alright. For a screenshot, and we have no P&L yet. Lit. Alright, fam, we chillin'. Chillin', man. We slightly blue. We chillin' in the blues, baby. Like it, I like it. You need your $200? Yeah, nah, I feel you. What do you, how many winning trading days do you have? Do you like have 4? Like, are you trying, like... Sometimes I'll be making decisions just based on, like, the situation. I mean, like, it's a Wednesday before CPI, so... I would like, if I were you and I was on 4 days, and again, maybe you're not, maybe you are, I don't know. But, if I was on 4 days, I'd probably take my $200. It also depends where the account's at, and if you're trying to grow the account, if you're trying to withdraw from the account. But remember, too, like, you're, especially on Top Step, it's like, if you're up 4 grand, you know, and you're able to withdraw, so you're able to withdraw 2 grand of that, you know, but then you only have $2,000 like drawdown, which, again, is enough to work with. Because, again, you just scale back the risk until, you know, you get a little bit more of a buffer, but... Again, it's so situational. It's tough to coach people through it without knowing everything. Not that I'm trying to coach you through it, or that you need to be, at all. Just for science? Yeah, bro. Listen, we're big fans of taking trades for science. And if you guys are in the free Discord that we have, which if you're not, there's a link in the description of this live stream. Feel free to join and kind of hang out with us. But we also have the, you know, the premium trade room associated with that, which you guys don't have to join. Join the free, you know, learn, chill, whatever. Just have some good vibes. But for those of you that do like to trade with me every single day, I am documenting all the trades that I kind of like officially send to the trades channel. And I also have a journal that we're tracking it with, which I'm gonna make the link public. It's gonna be publicly available to everybody. But you'll be able to kind of like filter through and see all the trades that we take, you know, for science, as we call it. And when we say for science, we just mean that, you know, we're trading, based off of one of two things. Either a little bit based off of intuition, meaning that we're kind of front-running our trading signals, which is a pretty dangerous habit, but something that experienced traders, begin to do as they're, fully confident in their strategy. They know what they're looking for, things like that. So sometimes you take stuff a little preemptively. And then we also have force science trades, which are if we're testing something new or if market conditions have changed and we're doing something a little bit out of the ordinary from what we normally do. We like to mark those as for science. This way in our journal, we can discern between the trades that we were testing stuff on and the trades that we were legitimately would have traded no matter what, which something a lot of people should do. But oil moving out pretty well for us so far. Beautiful little move off that again. No live OB formed down here, I don't think. Did we get a 5-minute OB? No, we didn't. So it is what it is, but we had the higher time frame narrative in mind. So shout out to those of you guys that are in the Discord that were talking about that this morning. You guys definitely opened up my eyes to some stuff. Let's see, I don't know, this time I'm looking to run up the XFA. I'm only cashing 10% until I get to 25k. Yeah, it depends, Megan. It's all super situational. Again, it also depends, if you have multiple accounts, so you're trading the accounts the same way, this and that. And just so you guys know, after all the videos drop on the course, because right now, I've scheduled videos on the channel. One actually drops in 4 minutes, so shout out to any of y'all that go support that video with a like and a comment, which, honestly, guys, means the world to me. If you guys could even like this stream, that shit really does mean the world to me, man. Just likes and comments, bro. Not even asking for anything else. Simple likes and comments when you guys see that I've uploaded something, whether you've seen the lesson or not, for those of you that have been with me for a long time. It really does a lot for the channel. Outside of the fancy thumbnails and clickbaity titles that I've started to adopt. But yeah, very much appreciated. But once all that stuff's kind of complete, I have some prop firm tips and tricks that I want to upload. And one of them is really around copy trading, because I made the mistake when I had a bunch of accounts with Top Step that I was copy trading everything at the same time, which again, you'll see a lot of influencers do this, and I'm not throwing any shade. I'm just, Trades by Matt, great dude, awesome dude, fantastic trader, whatever. I don't really even know him like that, but I'm not trying to throw any dirt on his name. I'm just saying he, as an example, is somebody who does trade all 20 accounts as a copy trade at one time, which is great because you make a little bit of money. It goes across all 20. The downside to that, though, is when you lose and you go on a losing streak, you're at risk of losing all 20 of your accounts, which is just real trash. So I do believe having some sort of cycling filter, or if you have 20 accounts, you copy trade 4 of them on Monday, and then on Tuesday you do a different 4, and then Wednesday you do a different 4. This way you spread around your wins and losses, man. Again, there's no right or wrong way to do that, but I don't know. For me, I feel like people would see more success if they rotated their accounts. That's just my belief. I see better results doing that. Again, maybe other people do, maybe other people don't. But it is some content that I wanna put out there for everybody. Oh nah, bro, asking for likes. Yeah, like the streamer you're banned. That's simple. There's no more choice now. You either go like all the videos on my channel or you're banned. Get out of here. Kicking you through the moon door. That's it. Get on out of here, man. They're gonna make you fly. Now this oil going pretty well so far though, fam. We up. We could probably reduce our risk now to the low if you want to. That's a personal choice you'd like to make. Feel free. If you'd like to go break even because you're, scared, that's fine too. But I'm not going to do that quite yet. I want to see a little bit of a pullback and then one more push, then we can go break even. Yeah, man, I know you don't want to go through that moon door, bro. Tell you, bro, I wouldn't even want to look through that moon door. Never mind go through it. Alright, so we have a relatively good trade so far. Bad, not bad. Yeah, the 4-hour, again, we do need the 4-hour to close nice. I do know it's 10 a.m. by the way, but I know Powell's not quite speaking yet, so we'll give him some time. I'm gonna just really quickly go to the micro, because can't really see shit on the other feed. So yeah, not looking too bad, not looking too bad. Again, we have 4-hour live OB here, which, again, if you don't know what that is, and you're new to the channel, you know, feel free to pop through the recorded videos on my channel, and you can learn that right there. Yeah, hopefully we get some nice continuation here. I'm gonna pull up the Powell stream and see when he starts talking, and then I'll shut my mouth, and we'll see what he's got to say. So CNBC is not even live yet. Okay, so we got some time. Might add a little more risk. Yeah, it's up to you, brother. I mean, I you know, I added some myself, but remember with futures, man, you ruin your average price with that. So proceed as you see fit, but don't go too crazy. This music kind of fire today, I ain't gonna lie. And it's supposed to be not copyrighted too, so we'll see if YouTube gives me the famous daily copyright strike that I get, mostly for playing clips from The Office. NBC wasn't really a fan of me starting my stream with clips from their YouTube channel. They got all mad. They were yelling at me and shit. But I'm not monetized, so I don't really give a fuck. Alright, Mr. Powell. Where you at, baby? The NBC is still not live? Get somebody else. Where's you at? Give me Yahoo. There we go. Yo, if Powell ruins our oil trade, I'm gonna be a little upset with my man here. Alright, let me move the Discord over here. Let me move Mr. Powell to my monitor over here. Alright. Family, anything else for me before Powell starts to speak, or anything else like that? Alright, Mr. Powell, where you at, bro? We see more pullback from Bitcoin. I haven't checked the goddamn thing Bitcoin's been doing recently. We see more pullback. So this is the pathway that I drew out for some of my people. This is kind of what I see happening. So there's a possibility that into September-ish, the time don't really matter. Into September-ish is a dumb thing to say. But there is a possibility that we run these lows one more time, in my opinion. But it does require us to kind of do nothing for a while. But this is the path I currently have laid out today. Again, though, I mean, listen, if you believe in the macro of Bitcoin, stop worrying about pullbacks, please, 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 please. Just turn on your DCA and forget about it, just like you would your 401k. If you don't treat your Bitcoin holdings like a 401k, then I'm gonna be honest, you're not gonna like anything that I have to tell you about it. So, if you're like day trading Bitcoin or some nonsense like that, I mean, it might be more, relevant for you, the intraday levels, but if you're like just macro accumulating it as like a long-term investment, dude, who cares? Like, that's just my honest opinion. Like you don't call your job and say, hey, I think that the markets are gonna fall. Can you stop my 401k contribution? Like most people don't do that. So stop doing that with Bitcoin, man. It's my thoughts on that. Listen, and I've been accumulating Bitcoin consistently since 2016, right? So I have like almost a decade in Bitcoin. Again, I'm not here to brag about my bags, not here to do anything like that, but I can tell you right now, the people that say people lose long-term on Bitcoin are idiots. Just buy it, hold it, and treat it like a retirement account. Alright, this stream is starting. Powell's not speaking yet. I don't care about these other people, but once he starts speaking, I'm putting him on. And I'm shutting up. We're going to continue to watch our oil trade here, which I'll also have up on screen in and out. Yeah, I was with you guys for years. Even your original Discord will be joining in a few weeks. Yeah, Pav, bro, you're like one of the true OGs to my content and shit, bro. So shout out to you, man. Thank you for joining us today on YouTube. And I did see that you hopped into the free section of the Discord, which again is right below. Super cool. Y'all can ask me questions. I'm not gonna tell y'all to pay, but best place to ask me is definitely in Discord. But yeah, shout out to you, brother. Thank you for rocking for so many years here. All right, let me pull these guys up here. Let me get stream all ready for these boys. Let's see here. This. Let's also turn this music off. Turn these guys up.
Including the Fed previously expected. There's still work to be done to reach the Fed's 2%.
All right, family, give me a quick thumbs up in the chat if the audio is good from the video here. Quick thumbs up in the chat if the audio from the video is good.
The commitment to independence of the Federal Reserve is of utmost importance, and it is critical, especially in a political year like this. Just as, Chair Powell, just as you did in previous administrations, you must not allow politics to cloud the Fed's monetary policy. However, despite your best efforts, the Fed independence remains at risk, and unfortunately, calls are coming from inside the building. Under Vice Chair Barr, the Fed's regulatory and supervisory agenda has become
Y'all should be able to see it now, too.
Most notably,
you don't have to confirm that. I know you can.
In-game proposal.
All right, fam. Oil is still going good so far. If you guys want to go break even on it, be my guest. I reduced my risk to the low down here. Actually, you know what? I'm gonna just go break even on this too. Fuck it. Why not? Let's not take a loss.
Process 410 almost universally negative public comments regarding the unjustified.
I'm gonna keep my stop at the low. I'm sorry. I averaged in, so my entry is like more up here. I can't do that.
Recent press reports, which seem to be the only way Congress gets details on the Basel III endgame progress, And your comments yesterday indicate the Fed will finally conduct a long overdue quantitative impact study. That is welcome. And if true, this is a promising development. Chair Powell, the last time you testified before this committee, you stated that the initial Basel III endgame proposal will undergo, quote, broad and material changes, end quote. Yesterday in the Senate, you said the board supports reissuing the updated proposal for public comment. I'm concerned that press reports also claim the Fed will tuck any changes to the proposal into this quantitative impact study. That study, including the substantial changes to the proposal, would then be issued for public feedback with relatively paltry comment period. I'll reiterate to you here what I've said to you in private. Broad and material changes to the Basel III endgame necessitate a full reproposal, full stop. Full stop. Failure to do so will result in an immediate Congressional Review Act vote out of this House of Representatives as quickly as we can possibly process it. Now, it doesn't have to be this way, and I think the Fed adhering to its longstanding principles here is highly important, especially with this interagency process. I'll close with this. Your steady and capable apolitical leadership of the Federal Reserve has shepherded our economy through extreme uncertainty. We now find ourselves in the midst of a new type of uncertainty surrounding the leadership of our nation. Doubts, fears, and panic often lead to bad decision-making and even worse policy. I urge you to reject outside political pressure in this volatile time and stay the course for the good of the American people and our economy as a whole. Thank you for your service, and I yield back. I'll now recognize the ranking member of the full committee, Ms. Waters.
Thank you very much, Mr. Chairman. Welcome back to the Honorable Jerome H. Powell, Chairman, Board of Governors of the Federal Reserve System. Chair Powell, as we saw with the latest jobs report, the labor market remains strong and the economy is surging. Despite inheriting an economy from the prior administration that had the worst jobs record since the Great Depression, President Biden has now overseen a record 15.7 million jobs created since he took office, with 206,000 new jobs created just last month. Not only that, but under the Biden administration, we're witnessing low unemployment rates, rising wages, and stabilizing prices for goods and services. This has not only created
What
more
she calls
jobs,
strong leadership.
rebuilt our
None of it.
infrastructure, supported small businesses,
I hate these people.
eliminated mostly junk fees, wiped out more than $144 billion in federal student loan debt for 14 million bars.
Also, oil
and cut
running very
child
nice for
poverty
any of
in
us
half.
that are in this
President
trade.
Biden
You should
is
definitely
and
reduce
will
risk at the
continue
very
to
least
advance
to
policies that are
as close to
providing
break even as you can.
good-paying jobs and an economy that works for everyone. Now, while I'm pleased to see that inflation is declining, the latest data makes clear that housing remains the #1 driver of core inflation. Since 2020, house prices have increased by nearly 50%, with Americans now spending on average over 30% of their income on housing. This is a top priority for Democrats, but remains an afterthought for Republicans. Earlier this Congress, I reintroduced my comprehensive legislation housing package, including the Housing Crisis Response Act. This bill provides more than $150 billion in fair and affordable housing investments, representing the single largest investment in affordable housing in our nation's history. These funds would create nearly 1.4 million affordable and accessible homes, bring down housing costs for all, and revive the American dream of home ownership. Committee Democrats are committed to getting this bill across the finish line and continue to hold out hope that our Republican colleagues will finally join us in this effort. Unfortunately, extreme MAGA Republicans are not just ignoring housing inflation, they're advancing their Project 2025 manifesto that would dismantle U.S. democracy and the economy as we know it today. Project 2025 is authored by almost 24 former Trump White House staffers and Trump administration officials. It was compiled and published by the ultra-far-right Heritage Foundation, whose CEO recently declared that they are, quote, in the process of a second American Revolution, which will be bloodless if the left allows it to be, quote, unquote. And if that kind of talk reminds anyone of the rhetoric we heard in the lead up to.
Yeah, somebody let me know
January
in
6th,
chat. Is
2020,
like,
it
because
should.
I haven't looked into this
Project
Project 2025 shit.
2025 promotes
Is this being
radical
over
ideas to
exaggerated? Is this even
materially
real?
undermine
I don't
the
even know.
Federal
It seems
Reserve,
like a
if not
it
effectively
seems like a
abolished.
planted
MAGA
agenda
wants to
by the
put
left,
put you out
but
of a job,
I wouldn't be surprised
Chairman
if it's
Powell.
also real.
So I look forward to your testimony and hearing from you, a Republican who was first nominated by President Trump, about your thoughts on the importance of the Federal Reserve and the work you have done to help our economy. And I yield back.
Gentleman yields back. I note for the records, Jerome Powell was initially nominated by President Obama to the Board of Governors of the Federal Reserve before being nominated by President Trump to chair. So here we are. We'll recognize the chair of the Financial Institutions Subcommittee, Mr. Barr, the Andy Barr variety, for 1 minute.
Thank you, Mr. Chairman. Welcome, Chairman Powell. Runaway inflation and increased interest rates necessary to confront it continue to hammer Americans, and especially those living paycheck to paycheck. Workers and families feel the pain, making everyday purchases at high prices in the grocery aisles and at the pump. They have suffered years of eroding purchasing power in their paychecks under the Biden administration's economic mismanagement. Heightened mortgage rates make it prohibitive for new home buyers to reach the American dream of a starter home for their family. I am pleased that the Fed is resolute in getting inflation under control. I am pleased that you have committed to an apolitical approach to this. I am not pleased by the Fed's opaque, unjustified, politicized, and underanalyzed regulatory proposals, which will ultimately hurt all Americans. We need to know where the Fed is going on its fundamentally flawed Basel III Endgame proposal and its opaque regulatory approach. I yield.
Well, Chair now recognizes the ranking member of the Financial Institutions and Monetary Policy Subcommittee, Mr. Foster, for 1 minute.
Thank you, Chair McHenry and Ranking Member Waters. I'd like to also thank you, Chair Powell, for joining us today and for the role you have played in combating inflation and supporting a stable economic recovery. While the presidency is often the focus of political pronouncements about macroeconomic conditions, there's no question that that undersells the importance and the independence of the work of the Federal Reserve Board. While actions taken by the President and Congress certainly play a significant role, monetary policy decisions made by an independent Federal Reserve are the big dog in shaping macroeconomic conditions that shape economic outcomes for millions of Americans. And work continues on inflation, but significant progress has been made to bring the country in line with the Fed's 2% target. The good news is that macroeconomic policy is working as designed. Well-calibrated monetary policy with fiscal support from the American Rescue Plan, the Infrastructure and Jobs Act, and the CHIPS and Science Act has powered strong job creation and low unemployment while staving off a recession that many thought inevitable, and far better, I should point out, than our peer countries. While Democrats are committed to supporting your efforts to cut costs for American families, I yield back.
We'll now welcome the testimony of Jerome Powell, the 16th chair of the Federal Reserve Board of Governors. Chair Powell, you'll be recognized for 5 minutes to give an oral presentation or testimony. Without objection, your written statement will be made a part of the record. You're now recognized for 5 minutes.
Chairman McHenry, Ranking Member Waters, and other members of the committee, I appreciate the opportunity to present the Federal Reserve's semi-annual monetary policy report. The Federal Reserve remains squarely focused on our dual mandate to promote maximum employment and stable prices for the benefit of the American people. Over the past 2 years, the economy has made considerable progress toward the Federal Reserve's 2% inflation goal, and labor market conditions have cooled while remaining strong. Reflecting these developments, the risks to achieving our employment and inflation goals are coming into better balance. I will review the current economic situation before turning to monetary policy. Recent indicators suggest that the U.S. economy continues to expand at a solid pace. Gross domestic product growth appears to have moderated in the first half of this year, following impressive strength in the second half of last year. Private domestic demand remains robust, however, with slower but still solid increases in consumer spending. We've also seen moderate growth in capital spending and a pickup in residential investment so far this year. Improving supply conditions have supported resilient demand and the strong performance of the U.S. economy over the past year. In the labor market, a broad set of indicators suggests that conditions have returned to about where they stood on the eve of the pandemic, strong but not overheated. The unemployment rate has moved higher, but was still at a low level of 4.1% in June. Payroll job gains averaged 222,000 jobs per month in the first half of the year. Strong job creation over the past couple of years has been accompanied by an increase in the supply of workers, reflecting increases in labor force participation among individuals aged 25 to 54 and a strong pace of immigration. As a result, the jobs-to-workers gap is well down from its peak and now stands just a bit above its 2019 level. Nominal wage growth has eased over the past year. The strong labor market has helped narrow long-standing disparities in employment and earnings across demographic groups. Inflation has eased notably over the past couple of years, but remains above the committee's longer-run goal of 2%. Total PCE prices rose 2.6% over the 12 months ending in May. Core PCE prices, which exclude the volatile food and energy categories, also increased 2.6%. After a lack of progress toward our 2% inflation objective in the early part of this year, the most recent monthly readings have shown modest further progress. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. In support of these goals, the committee has maintained the target range for the federal funds rate at 5.25% to 5.5% since last July, after having tightened the stance of monetary policy significantly over the previous year and a half. We have also continued to reduce our securities holdings. At our May meeting, we decided to slow the pace of balance sheet runoff starting in June, consistent with the plans released previously. Our restrictive monetary policy stance is helping to bring demand and supply into better balance and to put downward pressure on inflation. The committee has stated that we do not expect it will be appropriate to reduce the target range for the federal funds rate until we have gained greater confidence that inflation is moving sustainably toward 2%. Incoming data for the first quarter of this year did not support such greater confidence. The most recent inflation readings, however, have shown some modest further progress, and more good data would strengthen our confidence that inflation is moving sustainably toward 2%. We continue to make decisions meeting by meeting. We know that reducing policy restraint too soon or too much could stall or even reverse the progress that we've seen on inflation. At the same time, in light of the progress made both in lowering inflation and in cooling the labor market over the past 2 years, elevated inflation is not the only risk we face. Reducing policy restraint too late or too little could unduly weaken economic activity and employment. In considering adjustments to the target range for the federal funds rate, the committee will continue its practice of carefully assessing incoming data and their implications for the evolving outlook, the balance of risks, and the appropriate path of monetary policy. Congress has entrusted the Fed with the operational independence that is needed to take a longer-term perspective in the pursuit of our dual mandate of maximum employment and price stability. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Restoring price stability is essential.
Hey, Wally,
to
did you
achieving
go
maximum
any
employment
shorts on
and
gold
stable
here?
prices over the long run. Our success in delivering on those goals
Just
matters to
curious.
all Americans. I'll conclude by emphasizing that we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. Thank you. I look forward to your questions.
Well, thank you, Chair Powell. I'll now recognize myself for 5 minutes. Chair Powell, let's begin with this question of the Basel III endgame. I know you got questions about it yesterday, but I think we need further clarity. Your testimony about Vice Chair Barr's discussions with the FDIC and with the OCC on the next steps for the Basel III endgame. You mentioned potential changes have been made to the original Basel III endgame, that a lot of progress has been made, and that the board is very close to agreeing on the substance of those changes. But the next steps, that's really what I want to get into. Let's get through the mechanics of what happens next. If the Fed, the OCC, and the FDIC agree on the substance of whatever changes you're going to make, what happens then? Like, walk through the mechanics as you anticipated.
Okay, so we're very close to having exactly that agreement on the substance of the proposed changes pursuant to those talks. The next question then is how to proceed. And, it is my view and the strong view of a number of board members that the appropriate thing to do is to take that new proposal and publish it along with the effects of the quantitative impact survey and put that out for comment again and receive comment.
Yeah, Wally,
on
I'm
that,
with
and
you. I
then
might
take
take
some
a
time
little
to
bit of money off
review
of
those
oil
comments
right before inventory is
finalizing the
here.
regulation.
So just keep an eye. I'll let you guys know.
That's a discussion we're having with the other two agencies now. We have not been able to reach agreement on a path to do that, but that's something that we think is the right way to do. That's what we've done in similar situations. There aren't that many similar situations, but when we see broad and material changes to an important regulation, we think let's go out again and give all the commenters another chance to comment.
Yeah, and that also avoids serious lawsuit risk and the risk that Congress step in and overturn this rulemaking using the Congressional Review Act. I think the other agencies here, if they're not agreeing with the Fed, they're running against the independence of the Federal Reserve here. This is not a trifling matter of policy. This is a matter of real substance for the independence of the Fed and rulemaking at the Federal Reserve, which I think we should be able to keep the independence of the Fed separate, especially in this political environment. But opening up to a new comment period, so that means you have to get consensus for the Board of Governors on the policy. You have to get the agreement of the scandal-plagued chair of the FDIC, or
Guys, I took 25% off oil. I took 25% off this position.
By the acting
just before inventories to lock in some
currency.
money. There's no reason we let
These
this
people
break
should
us
not have real
even.
standing with the Fed on a matter of serious policy, especially with a chair of the FDIC that is being ousted by his own party as soon as they can get a replacement confirmed. It's an absurd thing that the Fed has to go to an acting comptroller of the currency and a guy who's going to be out of a job very soon at the FDIC and get agreement. But thank you for listening. That was more of to convey this. So the quantitative impact analysis, is this going to include the interplay with the stress tests, GSIB surcharge, all the other capital charges here? Will that be a part of the quantitative impact analysis?
It'll be this proposal, which does include changes to the GSIB surcharge, but does not include the stress tests.
Okay. But the goal here with the quantitative impact is to actually measure the impact of these rules as enacted, right? Based upon what is existing regulatory structures. Okay.
That's right. Yeah.
All right, so let's get into the question of balance sheet as quickly as we can. 2.5 years ago, you stated, quote, the committee intends to slow and then stop the decline in the size of the balance sheet when reserve balances are somewhat above the level it judges to be consistent with ample reserves. That's 2.5 years ago. Where are we in this question of what are ample reserves?
Well, so the balance sheet, the runoff in the portfolio is now, I think, $1.7 trillion so far. So we've made quite a lot of progress. We think we have a good ways to go, and as I mentioned, and as you just mentioned, we've now slowed the pace, really with a view to getting as far as we can without creating frictions and disruption that might cause us to prematurely stop shrinking. Going a little bit slower might actually enable us to go further. We think we have quite a ways to go. It's very hard to be precise about it. It's really a question of supply and demand, and we'll find that level with a little bit of a buffer on top of it, and that's where we'll stop.
All right, thank you for your testimony. The ranking member, Ms. Waters, recognized for 5 minutes.
Thank you very much. Chairman Powell, are you familiar with Project 2025?
Not really, no.
You've heard about it?
I really don't focus on these things at all. I mean,
You don't focus, but you know there's something known as a Project 2025? The reason I'm asking you is because one proposal is to get rid of the Fed's dual mandate to promote only stable prices, but also maximum employment. This is your mandate. These are mandates, right? This is what you do. Is that right?
we do serve a dual mandate, that's right.
And so if there was anything that would get rid of the mandate, what would it do to our economy? What would it do to our country?
So the question of which mandate we serve is very much a question for Congress. My own view has been that the dual mandate has served us well. This is something Congress can change and change back to a single mandate. There are
What do
other-
you do to get maximum employment? What do you do?
Well, we have one tool on the economy, and that is we raise and lower interest rates. You'll find.
Yeah, I was
though,
going to
that-
say they
I mean,
lower
we
interest
certainly
rates.
at the Fed do believe that
That's
the
what they
dual
do.
mandate has been a good thing, and it's enabled us to. It has not stopped us from controlling inflation when that was the thing that needed to be done.
And so while, of course, I understand you may not have seen, heard, or read Project 2025, are you familiar with an effort in the country to get rid of diversity and inclusion?
Bro,
I see these
why
things
does
mentioned, but
Powell,
honestly,
dude,
we're-
Powell
we're
don't
pretty
care
focused on
about
our
this
task,
stuff, dude.
which is maximum employment, price stability. We're strong supporters of diversity at the Fed, as you know.
Are you aware?
Yeah,
that
which they have
I
no
created
control
a
over.
subcommittee on diversity and employment in this committee?
Yes, I remember that.
And do you think that getting rid of diversity and inclusion interferes with your ability to really realize the mandate of maximum employment?
I
Tell her no.
spent most of my career in the private sector, and what I observed was really successful institutions in the United States, companies, organizations generally, are those that do a really good job on diversity and get the best out of people and attract a broad, diverse
This
range
is
of
why
talents
are we
to the
asking
table,
him
and-
about
and
this shit,
people
dude? This
feel
is
comfortable
not.
speaking. So that's the way. we
Well, I
feel
fucking
about it
hate
at
our
the Fed,
government,
and
bro.
that's
It's
what
ran by a
we've been
bunch of
doing.
people that just want to talk
Continue
about
to
the
do.
shit that they want to
And
talk
do you
about,
think
dude.
it's important not only to have diversity and inclusion in the public sector, but in the private sector also?
Yes, and as I mentioned, if you look at very successful American companies, you will very often see that they're good at that. They're good at hiring, attracting, investing in, and keeping.
Yeah, as they
diverse
should
talent.
be.
That's one of the things
It's
that are
nothing to
really
do with
good,
you, though.
U.S. public companies do well.
Have you seen improvement during your tenure where diversity and inclusion has created opportunities for more jobs and helped to reduce the unemployment rate?
Certainly seen, I think you see over the course of my long career, a big
When's her
change
time up?
in
Is
diversity
this,
and
you got like
inclusion.
one more question?
And you see that in the private sector and the public
I
sector.
want to talk
and I
about the
think
jobs
that's
market,
generally
not about
progress.
DEI.
Under the work of this committee, and the subcommittee is chaired by Ms. Beatty.
Oil
she
is
was
still working
able
well
to
for us,
gather
too, while this lady
important
rambles
data
on about something he has
what
no
was going
control
on,
over.
in the private sector. And what she discovered was that many
Beautiful,
of the
beautiful,
CEOs
beautiful.
and others
DXY, gold
welcome
moving down.
the opportunity to learn more
indices
and to
not
do better
really doing
and to get
too much.
assistance. And we saw
Again, that's still,
improvement
it's like I said, oil is still the best setup of the
with
day.
diversity and inclusion. Have you seen that?
There's no question, if you talk to CEOs, they get this. If you want to attract the best talent in our country now, you need to be committed to these things.
And so I would like to compliment you on the job that you have been doing. I'd like to compliment you on keeping us informed about inflation. Not only do I welcome you here today, I look forward to working with you for years to come. I yield back. Thank you.
Thank you.
Okay, thank you, Ms. Waters, for that
The
pointless
gentleman from
line
Arkansas,
of
Chair of the Full
questioning.
Committee, Mr. Hill is now recognized for 5 minutes.
Thank the Chair. Chair Powell, thanks so much and welcome back to the committee. I want to pick up where Senator Tim Scott and Chair McHenry left off and reiterate my strong support for your comment yesterday in the Senate about the need to repropose the Basel III endgame. The Supreme Court's precedent, I think, makes clear that if a rule undergoes broad and material changes from the proposal to final rule, the public must be giving a meaningful
Oil is breaking up for us
opportunity to
here,
review and
family.
comment on those changes. You generally share that view, I think.
Again,
Is that right?
my TPs are like 8207-ish.
And I'm looking forward to
Y'all
seeing
should
the
definitely
results
start
of the
scaling off some
quantitative
profits here
impact
or
study
trailing
and
your
the
stops at the
separate
least,
comment
family. Please, please,
period,
please,
as well
lock in
as an
some money.
interagency
There's
agreement
no
you
reason not
referenced
to. Pay
yesterday.
yourselves, please.
Because of
please,
Dodd-Frank's
please.
role and the Vice Chair for Supervision, Vice Chairman Barr's role, and the Fed's role, would it be fair to say the Fed is a first among equals on proposing a rule like this? In other words, does the Fed have a supremacy position on determining whether it should be fully reproposed or not, or do you view it strictly as a collaborative basis? Just curious in your view on that.
I would say it's strictly collaborative, and I would say that our discussions with the FDIC, which Vice Chair Barr has actually been conducting, and the OCC, they've been very productive so far. So I want to make sure to say that we've continued to work our way through this, and I believe we will get fairly soon to a resolution of the remaining process issue.
Good. Well, let me turn from that subject to the court's recent decision to overturn the so-called Chevron doctrine. Many of us believe this was the first step to reining in decades, literally, of an unprecedented, uncontrolled growth in the administrative state. And so I think all of us on at least this side of the aisle are certainly saying to the Federal Reserve and other federal agencies in our jurisdiction that
Nice.
we want
Plus
to
800 for
reassert
Wally.
Article
Let's
I
go, bro.
authority
Run the
over
four. Awesome.
the direction
Awesome,
that
awesome, awesome.
independent agencies work.
I'm
Would it be
floating
fair to
about
ask you to
1,000 myself
certify
right now.
that because of this change in Chevron, that the Fed would commit to promulgating new rules only if they're at the direction of an explicit congressional authorization?
So I think, first of all, we're studying that and several other decisions that have just come down in the last week or two. So I haven't got anything definitive for you on that. I think you know us to be an organization, I know us to be an organization that is strongly committed to the rule of law. Supreme Court says what the law is. We'll always do what we believe the law is.
Well, I'll submit that question maybe in more detail in writing, and maybe you'll have a chance to reflect on that. Back in February, you were on 60 Minutes, and you said the U.S. budget deficit, the national debt are unsustainable. Do you still view that the U.S. is on an unsustainable fiscal path?
I do. I think I tried to be clear that the level of the U.S. debt is not itself unsustainable, but the path that we're on is unsustainable, and I think that is not controversial.
I think many of us certainly agree with that, and we know that when the deficit's at 3 times the economic growth rate and growing, it's of concern, and it's contributed to inflation. Just 3 years ago in Jackson Hole, Wyoming, you gave a speech where you were confident that inflation was transitory, which I think we've come to realize that's not the case. This hearing's sort of a can't-miss opportunity for the Fed to demonstrate some humility on the monetary policy decisions, which some on this side of the aisle particularly think have made inflation worse. Your August 2020 Jackson Hole speech, you said the flexible average inflation targeting framework regarding 2%, that you would let it run above 2%. Was the Fed blinded by the previous 20 years of global change that was deflationary and or you were not alert enough in 2020 to be more cautious about that change in policy?
So we were certainly mindful of a long period of time in which there have been very low interest rates, but also very low inflation, suggesting that the neutral interest rate must have fallen quite substantially. That was the standard view. The thing we didn't see coming was the pandemic. It's not like everything went off the rails. It's like we had this pandemic, and it really changed the way the economy is working. We had a big crisis. We did a lot of things. So the concerns that led us to, those concerns that we were in a world of very low interest rates all the time.
But now wouldn't you say we're in a very opposite situation where because of reshoring and tariffs and other policies that are quite inflationary?
I would say this. Those concerns are, right now we have the policy rate in the mid-5s, right? And we see the policy is restrictive, but clearly interest rates, the neutral interest rate must have moved up, at least in the short term. So I think that's the question we'll be asking ourselves in our review, which begins at the end of this year.
We look-
is
we
how
look
much
forward
of
to
what
that.
we
Now you
did
go
in-
back to
in
the chairman.
how much of what we did in that time period is relevant to the new world where rates appear to be higher.
The gentleman from Georgia, Mr. Scott, is recognized for 5 minutes.
Thank you, Chairman, and welcome, Chair Powell. It's great seeing you. Last time I saw you, we had the gracious pleasure of you visiting with me in my office, and we discussed a great variety of things. Thank you for that visit. Now, Chair Powell, this year the Fed tested 31 banks, up from 23 last year. Is that correct?
I believe that's right, yes.
And by estimating losses, revenues, expenses, and capital level under hypothetical stress scenarios, we did that, correct?
Yes.
And all 31 banks remained above their minimum common equity tier 1 capital requirements after observing losses of nearly $685 billion. Is that correct?
Yes, that is correct.
Yeah, I wanted to get those figures out and provide you with, you may have heard this, but I want to share it with the nation because your Vice Chair Barr made this statement, and I wanted to put this in the record, his exact quote from this great achievement. He said, "Our goal of our stress test is to help ensure that we have enough capital to absorb losses in a highly stressful scenario. And this test shows that we do." I thought that was a great statement of your record. Now, let me ask you my question. It's simple. Will the 2024 Fed stress test results have an impact on how prudential regulators roll out a new and updated capital proposal?
So the two are really two different things. There's the Basel III capital proposal, and then there's the stress tests. So, and really the Basel III, as I mentioned, we've discussed, we're almost ready to put forward for further comment a revised proposal with material.
Yeah, guys, oil was a fantastic trade. I'm just trailing the stop pretty close here. Again, no reason to give back most of the move, so... And as we move up to like 82.10, I'll probably just take my profits and end my day. But if the trailing stop hits, then I'll also have taken my profits and end my day. So
Because I worked with you with this. Our work goes all the way back to the Obama administration when we responded to that crisis with our banks. And you and I worked that up where we came up with the hardest hit program to help those who were suffering with, those states that were suffering with high unemployment and at the same time high home foreclosures. And we were successful. And we've established that program, and it's still going on and helping many of our states. But you know, I want to also share what is happening around the world as a result of our activities. The European Union is now set to delay key parts of its bank capital rules by more than a year so that their lenders will not be at a disadvantage. Over in Canada, it's important to know that their banking regulators have also delayed for another year, imposing high capital rules on countries' banks at the risk of making them uncompetitive. And the Swiss National Bank is highly unlikely now to adopt a proposed 15% capital requirement for UPS and other Swiss banks. And the Bank of England has issued a near-final proposal to increase UK bank capital by 3%. And I think this is all a measure of your great work and that of your vice chair. And I just wanted to let you have a comment on that, please.
Sure. So we're committed to finalizing this proposal.
All right,
Our banks are
family. I
going to live
think
with
we're
these rules
out of
for a
this.
long, long time. The main thing is to get it right.
I think we're
And that's
out
what we're doing.
of.
What we do in the end will be consistent with the
I'm still just
Basel,
trailing this
agreement,
title.
and
It
will
hasn't
also be
quite hit my
consistent with what
TP yet.
other
Actually, my TP's up
comparable
at like
large jurisdictions
85,
are doing.
82. I'm sorry, I put it right
You're
above
doing a
this
great
switch
job. Keep up the good
where I
work.
put it, but I'm still gonna just trail this behind each candle.
For 5 minutes.
Thank you very much, Mr. Chairman. Thank you very much, Chairman Powell, and also thank you for continuing to indicate that you will look at the entirety of the economy, the whole economy. Appreciate that. So one of the nation's largest banks recently warned in a memo, and it's also been voiced by smaller banks, that the current pace of regulations such as changes to capital requirements and lowering debit card interchange caps could lead to new fees associated with checking accounts and other increased costs for small businesses. This does come amid expiring tax provisions that are sunsetting as we speak, that are critical for small business, such as the R&D tax credit, interest deductibility, and bonus depreciation. This does raise the question, are you considering how these regulations and tax increases will directly work against your mandate to achieve 2% inflation? Moreover, with the proposed changes to Basel III, it is crucial to ensure that all stakeholders have a voice in this process, which you are stating will occur. And a Basel re-proposal and adequate comment period are certainly very welcome. So, Chairman Powell, yesterday in the Senate, you mentioned that the majority view of the board is to re-propose Basel III for comment period. Could you clarify if this means the proposal will be re-proposed from scratch, and any other specifics you can provide?
Sure. So we haven't reached agreement on this. As I mentioned, we're working through this with our colleagues at the FDIC and the OCC. And I can't tell you exactly what the form would be. The sense of it would be, though, that we're making material changes and that we would want the public to have a chance to look at those changes in the light of the way they play off against the quantitative impact survey, and should have a reasonable time to comment on those. In addition, we're focused on one big area, but there are institutions that have made comments all across the spectrum, and we're reading all of those carefully. And we're not going to republish all of those. Some of those we can just make changes and move forward on. So it's going to be a very labor-intensive, time-consuming process.
Okay.
Writing these things up takes a long time, and we're going to get it right.
Good, that's great. Obviously, Canada recently postponed, as did the EU and UK, for international competition standpoint. It seems to make sense, and so that's appreciated. Chairman, would you agree that excessive spending, increased taxes, limits on domestic energy production, in principle, are a cause for higher costs for business, contributes to inflation, and as well tightens the labor markets, kind of running contrary to your two mandates?
You're asking me a kind of a political question there. I don't want to criticize a platform of economic fiscal policies that are not really ours to decide.
It's more of an economic question, but I appreciate your answer, sir. So when you mentioned recalibrate policy yesterday in the Senate hearing, was part of your thinking taking a more holistic view of economic conditions?
Yes, very much so.
Okay.
Yeah.
Okay. Chairman, is there any data to support the so-called greedflation? This term greedflation somehow has caused inflation. Is there any data to support those comments?
So we look at it that this inflation has been caused by a combination of very strong demand and constrained supply. So it was really a high-speed collision between an economy that was reopening, and by the way, there was inflation all over the world at the same time. So these are some common factors. But at the same time, you had tremendous demand, for example, for automobiles. You had constrained supply because there weren't enough semiconductors. Long story short, but so that to us is what this inflation is all about. So we've observed the sort of healing of the supply side at the same time restrictive monetary policy is weighing on demand, and we've seen inflation coming down from
So
those
there's
two
no
forces.
data that supports that gouging of consumers is part of the inflation?
It's been very hard to track a connection with,
Okay.
earnings and things.
Secretary Yellen mentioned that she didn't feel that there was grocery
All right, guys,
price shock.
I am
and that's
mostly out of oil here. It hit our TP at 82.
American families.
Trailing just a little bit more to see if I can squeeze more out of the day, which is my trailing stop here. But I got this thing super tight at this point. So a beautiful trade. Again, we got long down around the 81.15. Some of us scaled in more, so the average price moved up a bit. Was able to go break even, was able to get the breaker structure. Again, trading from liquidity to liquidity. Super simple. Very easy things. Also had the 4-hour order block. And all the logic, man, that we use to spot and enter this trade is all on the channel, man. So please, if you guys have not yet went through that content, please do it. If you made some money off the oil trade, or if you just want to show some love and support, feel free to like the stream. I'm going to keep this testimony playing as I watch it, but I'm probably done executing on my side. Easy $1,000 day. We're good. I'm done. I don't need anything else more. No need for me to risk more. So I'm going to sit here and just watch this. I'll keep commenting in here and there if you guys have stuff you want me to look at. But outside of that, man, we're good on the money side. So we chilling for now, fam.
I'm also very much concerned about a lot of the discussion. I've been on this committee a while, and so it comes up quite often. When the Federal Reserve was birthed around the turn of the century, I think, around 1913, 1918, somewhere like that, prior to the establishment of the central bank, was our country experiencing a lot of recessions because of no security? People felt no security, particularly the business community, in making big investments because nobody was in control. Just kind of think what went on just went on. Is that relevant?
Yes, I think the lack of a central bank between 1836 and the founding of the Fed was a period of lots and lots of depressions, and a lot of it had to do with the crop cycle and the banks not being able to handle the very large seasonal swings, and there was no central bank to provide liquidity. So that's really what gave rise to the founding of the Fed in the early part of the last century.
Do you think that it is dangerous to blend monetary policy and fiscal policy?
To blend them?
Yes.
So we try to keep them very separate, and we try not.
What steps can you take from converting from trading Forex to futures? I found trouble calculating risk. Alright, Revenge, do me a favor, bro. Go back to the beginning of the stream. Skip all the music and bullshit, but once you see me pull the trading view up, I answered this question for somebody else. But if you need, bro, ask me in the Discord. I can send you a link that's useful as well, because I think I just seen you in there as well, so. But I'll send you some resources in Discord, but at the beginning of this live stream, we went over that too.
I don't want to draw you into any kind of a political response, but and I have not read all of this Project 2025 document. I read some of it online a couple of nights ago, but even whether it comes out of a 2025 or a 3089, whatever, one of the things that I'm concerned about, reading this from this document, that the document argues that the Federal Reserve is the inflation problem, and eliminating the Federal Reserve, imposing economic policy on the Fed that does not come from within the Fed. So I'm wondering here, would you agree with any of that I just stated, whether it came from me or Chairman McHenry or anybody else?
So I'll just say, first of all, we're certainly fair game for any criticism people have. I think what we've learned and what we know is that having an independent central bank is is really essential. If you want to have high and volatile inflation, then the quickest road to that would be to undermine the independence of the central bank, of the Fed in our case. So I frankly think that that view is very widely held. I find up here on Capitol Hill in both political parties.
So eliminating the Federal Reserve is best for promoting economic stability.
Yes.
Thank you. I knew that our chair, that the ranking member was going to come in and deal with the issue of housing. She always does, and we all appreciate the fact that she's obsessed with it, and I like that obsession. But I'm wondering, as we try to figure out how to deal with this issue. Oh my goodness, my time's running.
Was that a question?
I didn't finish it, but yes. If you knew where I was going, please.
Gentleman's time's expired. We'll now recognize the gentleman from New York, Mr. Garbarino.
Thank you, Chairman. Chair Powell, thank you very much for being here today. Based on some comments you made today and yesterday, it appears you've made quite a bit of progress on changes to the Basel III Endgame proposal, and you're very close to agreeing some of the substance of those changes. I know you won't get into specifics. You said that. I just don't know how deep you won't get into them, but I just want to confirm what you said to my colleague, Mr. Musi. There will be, you're not reproposing some things, it's just going to be a partial reproposal?
That's what we're looking at doing, is major things that we've been working on, and there will be additional changes that will be made that won't be reproposed. That's what we're working on, rather than a full, wide proposal.
So it's not a complete reproposal, just partial?
Yeah.
Can you get at least into, can you tell me which components you're?
You know, it's not until it's all agreed and ready to go and vetted. I'm reluctant to try to get into too many specifics, just because, you know, when you're doing these things, nothing is agreed until everything's agreed.
No, I understand. I'm
Yeah.
not asking for what specifically your changes,
Yeah.
which, if you're willing to say which.
I hope to be able to come
Okay.
to you with a really clear answer on that soon. I mean, I think we're ready to go at the Fed.
So that's my next question. So it's been said several times that you and many of your members of the board are at odds with your counterparts at the FDIC and OCC over how to proceed with putting out a revised proposal for comment. So if the FDIC and the OCC are not yet on board with allowing for a new comment period, who is holding up this consensus? Is it Chair Grunberg? Is it Director Chopra?
I don't want to say that we're at odds. I just want to say we're working through this issue together,
Someone's got to be holding it up.
well, you know, it's a discussion that we're having, and I think it's been constructive, and I think we'll try to keep it that way.
Can you at least answer whether or not the 5-member FDIC board needs to sign off, or can you just go to the chair?
No, I think it's the board, and of course the comptroller is one person, but I think I mean, the FDIC can speak for themselves, but I do think their board would be the question.
Okay. One final question, on timeline question before I move on. You mentioned yesterday that a reasonable prediction would be that Basel would not be finalized until the first quarter of 2025. Under this timeline, would it be safe to say that implementation would then not occur until at least the beginning of 2026?
Again, I can't be that specific, and you know someone asked me, does it sound like the first quarter of next year might be? And I said it might be. I mean, there's a range of times it would take. The thing is, as I mentioned, U.S. banks are going to be living with these rules for many years. The point of it is to get it right, not to do it quickly. You know, we want to get it right, listen to the comments, make sound decisions, and move ahead in a way that is, you know, gives us a sustainable set of rules that we won't have to come back and fix all the mistakes in.
Thank you. I want to move on to another topic, long-term debt. You mentioned yesterday that you would most likely not move forward with other rules until people reach a place of understanding and acceptance of a revised Basel proposal. I hope that's the truth, as banks need to fully understand the implications of a Basel proposal before any action is taken on long-term debt. Finally, Chair Powell, I'd like to emphasize the need for the Fed to conduct a comprehensive, data-driven, and most importantly, transparent assessment of the current liquidity framework. So very quickly, will you commit to conducting a public quantitative impact study and a full notice and comment rulemaking before imposing any new liquidity requirements?
I didn't catch the first part of that, the first part of your ask.
Will you commit to conducting a public quantitative impact study and a full notice and comment rulemaking before imposing any new liquidity.
On the liquidity thing, I'm not exactly sure what we're contemplating there. We certainly contemplate getting a full range of input from the public on that, because some of these are novel ideas, and we understand that.
All right, as the chairman said before, these impact studies are very important because they're to show what impact these rules will have. So I think that is very important that we have that, because we had a mucked up process with Basel 2.0, and I don't think we don't want to repeat that. And I have a little time left. I'm going to yield to my colleague from Pennsylvania, Mr. Music, because I know he had another question.
I thank my colleague. Chairman Powell, just back to what we were talking about, the price instability of groceries and gasoline, where we do have somewhat of an affordability crisis, has been termed. So would lowering rates in the near future be a pro-growth initiative, perhaps? Is that something that's being considered that would actually drive investment and give a clearer picture for investment and perhaps help in these two categories and, in the end, increase in supply so as we lower those prices?
Honestly, when we think about our near-term rate moves, we're thinking about a couple things, and the first of which is we want to be more confident about inflation.
My apologies, Chairman, I went over.
Sorry.
Chairman, I yield back. I yield back to my colleague.
The gentleman from California, Mr. Vargas, is recognized for 5 minutes.
Thank you very much, Mr. Chairman. Thank you again for this hearing, and the ranking member, thank you very much. Chairman Powell, thank you very much for being here. We appreciate it. In fact, I was looking at your history when they were saying who nominated you when you got here and all that. In fact, you had public service even prior to that time, right?
That's right.
So I thank you for your long public service to the nation. I think
Thank you.
you've been outstanding. I think
Appreciate
we all
it.
respect you deeply here. You're pretty boring here today, to be frank.
Sorry?
You're pretty boring here, to be frank.
Thank you. That's a high compliment.
Yes, it is, because
That's a high
sometimes when you're
compliment.
here, there's all
It is,
sorts
though,
of
for him.
cameras here, and they're watching your every step and all. And I think there's a reason for that, right? And that's because the economy's doing all right. Am I wrong about that?
You know, take a look at our economy. We're growing at around 2%.
I mean,
It
my
feels
stock
like
portfolio doing great.
inflation is down to 2.6%. Unemployment's at 4.1. These are good numbers.
Yeah, I mean, I hear the parade of horribles on the other side, how the sky's falling, but I don't see the media here to attest to that. In fact, it's just the opposite. Did you read some of the headlines of the new government in Britain? Some of the headlines? If not, let me read one. It says, "New British government inherits worst economic plight since World War II." And in fact, there's a number of headlines like that saying that England's in trouble. I imagine if you were running their central bank, I bet you there'd be a whole bunch of media here beating you up to find out, what the hell you're doing or what you aren't doing. And I think the reason for that, again, is I think the government here has done a pretty darn good job. One of the things you said you didn't see coming was the pandemic, right? I'm not putting words in your mouth.
Right.
In fact, I was here and I heard the parade of horribles that we were going to have a recession, maybe a depression. In fact, the country was going to fall apart. Did it?
No. We went through a period of high inflation as the other countries did, and that's very
And
challenging
in
for the
fact,
people.
isn't it the case that most of those countries had higher inflation than we did in Europe?
Over time, there were times when their inflation was higher. I think
Yeah, it was.
overall it was broadly comparable.
Yeah, in fact, I brought it up a number of times here because there was a whole bunch of those countries that had much higher inflation than we did.
Well, Europe was much harder hit with the energy issues coming out of the Ukraine war than we were.
Sure. I mean, there's a whole bunch of other issues to instability. They had political instability, a whole bunch of other things, obviously. But, I mean, it is interesting today that, the parade of horribles that we hear doesn't seem to manifest itself with the media or the attention that you normally get. And that's good. I mean, I think it's a great thing. Now, I do want to ask a couple questions. I do have concerns, Basel III on housing. I think I've made those concerns known to your office, and I won't rehash them. But I do have issues that I want to talk to you about with regard to climate. Obviously, you said you don't read too much of the news. You didn't hear about Project 25. I don't think that's what you meant to say, and I don't want to put words in your mouth. I think when the ranking member asked you if you had heard about it, I think you said no. I think you've probably heard about it, but you haven't read it.
I've seen nothing more than headlines on it. I mean, I've devoted zero
Me too. I don't read
energy
that.
into.
I don't read that wacky stuff myself either, but I certainly read the headlines. But the reason I ask about the headlines, because you obviously have seen what has happened in Texas. You've seen what has happened with climate change. And in fact, you've testified, I think, before that you believe in climate change. Is that correct?
Sure.
Yeah. And so what are we doing? You've taken a number of steps, I think, that have been very positive to make sure that we look at the risks of climate change. Could you go over some of those? Because that does concern me. I think that's a change that we also didn't see, well, I saw it coming. I've been saying it for a long time, but a lot of people didn't believe.
So, if you're looking at financial regulators, you're looking at people who have a very, very limited role in climate, and that is just to look at the institutions that we supervise and make sure that they understand and can manage the risks that they're running. That we are not climate policymakers.
Right, and I'm not asking
It has to
that.
be elected people who do that.
Right, but you have to take a look at the risks. I mean, look at the risks that the insurance companies are taking, and the banks, of course, are financing these homes, and now you can't get insurance on them, so all of a sudden you can't rebuild. I mean, these are risks that the banks are looking
So
at.
we don't regulate insurance companies.
No, right, but you regulate the banks.
Thanks, yeah.
And these banks have mortgages on those houses, do they not? Many of them.
Well, in many cases, they're not writing mortgages anymore. So that's the result we're getting, is that banks are saying, they see these risks. They do.
My time's up, but thank you again. Appreciate you.
Thank you.
The gentlelady from California, Mrs. Kim, is recognized for 5 minutes.
Thank you, Chairman. Chairman Powell, thank you for being with us today. Gosh, you're under a lot of pressure from all sides to divert from our monetary policy goals. And I commend you for your leadership and staying focused on the core missions of the Fed, which are price stability and maximum employment. So thanks again for your leadership. And you have stated that it is the Fed's strong view that you will have to reopen the Basel III Endgame proposal for comment again. And I really urge FDIC and OCC moving forward with reopening the comment period. Chairman Powell, would broad support mean abandonment of any modified proposal that garners mostly negative public comments in a public comment period for the modified proposal?
Sorry, I didn't follow your question.
Would broad support mean abandonment of any modified proposal that garners mostly negative public comments in a public comment period for the modified proposal?
Broad support empirically would mean, a good solid vote on the Fed board. And I've tried not to be specific about what that means, but it also means broad support among the broader community of commenters on all sides. That's what I meant by broad support.
Got it.
Yeah, that's what I meant by it.
Thank you. And as the Fed looks to enacting several changes to the proposal, I would also urge you not to overlook how the Basel Endgame proposal would disproportionately impact FBOs and regional banks and U.S. domestic jobs because of the way the outside operational risk is, weighted. So can we get your commitment to that?
So let me just say I'm not going to get into specifics. We're well aware of those concerns. We've obviously carefully digested all of the comments we've gotten from all different sectors, and those are concerns that we're well aware of.
Thank you. Let's switch gear to another matter. You have spoken for the need of transparency. Are there any conversations at the Fed to have more transparency and better engagement and consistency with stress tests?
So we have increased transparency in the stress tests over time, and I would say we do. If people want to write articles and make comments that are critical of the stress tests, we're going to read those and we're going to think about it.
Yeah,
And
Matt,
we're open to
oil continued
improving it. We know
to
that the stress test has to evolve
push up
over
there
time.
for
It's
us hitting that
totally
final
relevant, and I
TP.
think
So
transparency is
beautiful
one of those
trade for
subjects
anybody
where
that was in it with
we're
us.
prepared to listen and think
I don't even
about
think we had any drawdown on this
Definitely.
trade,
I would like to see
honestly.
more stress test regime
Beautiful,
that is
beautiful
more
move.
transparent and adept at identifying unforeseen risks. So we can
That's the type of
achieve
trading we
that
like.
by being more collaborative.
That's the type of trading we like.
Yes. So
I don't really
I'm
see
also
too much else
interested
going
to hear
on.
from you
I know you said
whether
you sold
you and your
NASDAQ up
fellow
here off
banking
the
regulators
YPB.
have
Beautiful
considered the
catch. I didn't
cumulative
see it myself,
impact
but
of any
beautiful
new
catch.
liquidity standards with the
You
Basel
know,
III framework and the
again,
existing
nothing else that I
post-crisis
really see in the market. So I'm
liquidity
probably gonna wrap my
requirements.
day up
So
there.
what industry
I am
engagement
gonna
has the
leave this
board
stream
staff
on with
held
this just
with
playing,
respect to
but
changes to the
I'm gonna
liquidity
step away
framework?
personally. So if you guys want to continue watching,
So we haven't
that's up
actually
to
made
y'all.
any
But
proposals on that
yeah,
yet.
I'm
We
pretty
have
much
had
done for the day
significant
on the
industry
trading side of
interaction
things.
on
Oil was a beautiful
the
trade.
proposals, and
If you took that with us, awesome. If you
we will
didn't,
move, I think, at
I'm
some
sorry.
time
Should have
this
been here
year.
What
earlier,
about
I
the
suppose.
board
If
staff?
you're new to the channel,
Have
feel free to
they
subscribe,
conducted any
like,
industry-wide
comment, all
data
that fun
collection
stuff.
to
But
study
I'm gonna let
the
this continue to rock
necessity
out, family.
for and the impact of any changes to the existing liquidity framework?
I think we've done a lot of investigation on that front, but I think that this is the beginning of the process, not the end. You know, we haven't published proposals yet. We're working on them, and it's a pretty early stage.
Thank you. Let me quickly talk about the inflation issue. We had a peak inflation rate of 9.1% in June 2022, and a lot has been talked about being a supply side issue and the demand shock from the opening economy. So can you elaborate how the expansion in the money supply and fiscal stimulus played a role in persistent inflation, and why is it so important to get to the 2% inflation rate goal right now?
So the inflation that arose here was a collision between very strong demand as the economy reopened. Remember that there had been fiscal transfers. We had rates very low. You know, those things were done because we thought we could be looking at a very, very bad economic time. As it turns out, the economy reopened and demand spiked very high. People had saved a lot of money because they couldn't spend. And so there was tremendous demand, and there was constrained supply. And what you got was inflation, and you got that everywhere in the world. That's what happened. So what's happened to bring inflation down, we've made quite a lot of progress on inflation. To bring inflation down, the Fed has been working on, with restrictive policy, on cooling demand. That has been working, and the supply side has been healing, and the negative labor participation shock has essentially reversed, adjusted for. So it's kind of working out as we had expected.
Thank you very much, Chairman.
The gentlewoman from Georgia, Mrs. Williams, is now recognized for 5 minutes.
Thank you, Chairman McHenry, and thank you, Chair Powell, for joining us today. As the president of the Federal Reserve Bank of Atlanta, Raphael Bostic has so rightly pointed out that combating economic inequality is a critical part of the Fed's dual mandate. When everyone in our community doesn't have the opportunity to contribute to their fullest potential, the economy is not firing on all cylinders. Nowhere is this more apparent than in my home city of Atlanta, which has more Black-owned businesses than any other city in the country, but is still among our nation's leaders in the racial wealth gap. I applaud you and your staff at the Federal Reserve for the work that you're doing to make sure that the economy works as well for the hardworking people of Georgia's fighting 5th District as it does for those in the top 1%. This includes helping to make sure that financial services are affordable and accessible to everyone. As the Fed moves forward with the proposed changes to Regulation 2, I know that protecting access to affordable and accessible banking is at the top of your mind. That is why I was concerned when I started receiving outreach about the unintentional effects that Reg 2 proposed rule would have on marginalized communities, including my constituents in Atlanta. Specifically, I heard about the impact that the reduction in interchange fees proposed by this rule could have on bank-owned certified accounts in my district and across the country. The Bank-Owned Initiative is a partnership between financial institutions and trusted community-based organizations to offer low or no-cost bank accounts to unbanked and underbanked individuals. Access and affordability are at the heart of the changes that you're proposing, and I couldn't agree more with those goals, but we have to make sure that programs designed to serve unbanked and underbanked individuals in marginalized communities continue to flourish. In response to these concerns, my colleague across the aisle, Mr. Lukemeyer, and I sent a bipartisan comment letter in March to you highlighting those very concerns and urging that the final rule not negatively impact low and moderate income communities. Chair Powell, how does the Fed take into account how regulations impact constituents who don't have an attorney or an interest group to submit a comment on their behalf?
Well, let me say first, we have heard those concerns that you raised and others have raised about aspects of the proposed rule. And, we very much understand the concerns that are being raised. In terms of people where we don't have comment letters, we try to be thoughtful about the impact of our regulations, but principally we're looking for public comment on things.
Thank you. The FDIC's most recent data shows that the rate of unbanked households is at an all-time low. The Bank-Owned Initiative has certainly played an important role in this progress. Bank-owned certified accounts are available to more than 95% of low and moderate income households across all 50 states. Access to low or no-cost banking services is a door to financial inclusion and wealth generation for marginalized families. As written, Reg 2 could undo some of the enormous progress made in the past several years. Chair Powell, how can regulators work with members of this committee to ensure that future proposed rules do not hinder Americans' access to tools that enhance the Federal Reserve's financial inclusion efforts?
So we're very focused on things like bank-owned, as you pointed out, and on access to the financial system for marginalized communities. And we wouldn't want to do anything to weigh on that. We were happy to work with you in your office on those issues. But as I mentioned, we're hearing the comments and we're reading them, and we're taking those into account as we think about appropriate changes to the proposal.
So we will definitely follow up on that, because as we're writing these regulations, I want to make sure that we're thinking about the real world impact and what it means to consumers when they're accessing financial institutions. I look forward to working with you to further the Fed's financial inclusion efforts. Like earlier this week, I sent you another bipartisan letter related to the Federal Reserve's April proposal to extend the operating hours of FedWire Fund Service to 22 hours per day, 7 days per week, and every day of the year. That was news that I was eager to hear. This may sound like a small technical change, but it can have a big impact on our constituents, especially for those living in marginalized communities who live paycheck to paycheck. Growing up in the booming metropolis of Smith Station, Alabama, probably never heard of it, Chair Powell. But there are limited options for loans and short-term loans. In an area where everyone needs a car to get to work and they have to work to eat, when money is short, any delay in accessing a paycheck or paying a bill can disrupt your entire household. Extending operating hours for FedWire Fund Service and National Settlement Service will allow people continual access to their funds outside of what we've deemed normal operating hours. And I hear the gavel. I'm out of time, but we will be following up for more conversation. Thank you.
Thank you.